Okay, so what I'm saying is the market will always seek out liquidity and imbalances. Once you understand that, it's going to be way easier for you to trade. And this is what I mean. So let's say this is one example of a candle, right? So you can have this as your daily candle. And if you look at this daily candle, this is usually how the daily candle will be formed. Okay, so we have the low. So this is a buy candle, so we have the low, and then we have the high. Okay, so if now this is our low and this is our high, okay, so we have here our high. Okay, this is our high, and we have the low. Okay, now we have the high and we have the low of a candle. So let's say we want to buy, which means the market, we want this to go higher. Okay, so how do we make sure that the market goes higher? On a lower time frame, you might see something like this. The market will first, right, come down, right? Now when it comes down, you'll first see it moving this way before finally doing this, going higher, right? Now when it goes higher, it usually leaves a wick. Okay, now this is what we are going to be concentrating on this week. Do you understand? This week is what we are going to be concentrating on, to see this sweep of liquidity into what? Into something that we are going to call our fair value gap before the market manages to go higher. Okay, so let's say now this liquidity, we concentrate on it on a lower time frame. This is one thing you're going to see. Okay, okay, and once you understand this, and this whole candle represents this candle, okay, on a lower time frame, this is what you will see. The market is going to sweep this low, so it's going to do this, and then it's going to continue higher, all right, making higher high, higher low, higher high, higher low, higher high. Okay, now our main goal is to focus on this move right here. Okay, so once we understand what we are looking for, it is going to be easier for us to utilize all these moves so that now we go higher. So if this is our liquidity, and the sweep happened here, so this is the sweep. Okay, so we're gonna have that's our sweep right here. Now when the market usually sweeps here, there's usually going to be a fair value gap, what we are going to call fair value gap. Alright, so if you don't know what a fair value gap is, you can type it below so I can explain, or you'll get a video on what a fair value gap is. But otherwise, this is how the market will usually on a typical day will react. We got the high and the low, and the market will come sweep the liquidity, which means the previous, if let's say this is the daily low, so it will sweep the previous daily low and reverse going upwards. So now this is we are buying. Now when we're buying, we want in the lower time frame, you'll see movements like this going higher. Now let's say we were selling. Okay, now this is selling, so this is our daily candle and we're going to have it in red. Okay, now when the candle is this much, we're going to have our high right here. That's the highest ever went, and this is the lowest of the candle. Okay, now once we are, what do we expect the market to do? Since we are selling, we want to see this high being taken out, and then we target this low. Okay, so which means on a lower time frame, you'll see something like this. Okay, this is the overall move that we want to see. Now this is the movement that you want to see, the market doing this. Okay, now this is the move that we want to be concentrating on when you see them on a. Now what you'll see on a higher time frame is that the market will first start by doing this, okay, and then later it's going to switch to going lower, right? Now once it is going lower, it's going to leave a wick. What is that wick? That is now what we call the sweep. So the market is going to sweep liquidity. Why? Because this is what it does. Now on a lower time frame, this is what you will see. The market came, swept liquidity, and then started going lower. Okay, so this move right here is what we're concentrating on, this. And usually on the high, since we are selling, we are going to have a fair value gap up above there. Okay, we're going to have a fair value gap above the liquidity. So if we were selling, this is what can happen. Do you see? And when we are buying, this is what you want to see, the market going higher. Okay, so now let's now come if we are buying. One thing you have to understand is that where does liquidity resides? Liquidity resides in where? This is where the liquidity resides in. Liquidity resides in now. Once you understand this framework, this is what we're working with. If we were buying, this is what we would expect. This is a buy right here. If we were buying, we want to see the move going upwards. If we were selling, we want to see sweep of the high and then the market drops lower. Okay, so now how do we get to know if these are going to be, how do we even identify liquidity zones? Liquidity zones are usually in the previous weekly high, previous weekly low, we have previous daily high, we have previous daily low, we can even have sessions. Okay, so previous session high and previous session lows. Okay, now all of this, sometimes it can even previous 1 hour high, previous 1 hour low. Okay, so once you have this as your framework and you understand that once the market sweeps liquidity, it's usually these are the liquidity that is going for. Now once it goes for all of this, what are we going to do? We are looking for a fair value gap. Okay, this is a fair value gap. Now once we are selling, okay, once we are selling, we want to see something like this. Okay, once we are buying, this is what we want to see. So the market makes, sorry, the market makes, this is our fair value gap. If we were buying, we want to see something like this. Okay, I don't know if I'm making sense. So right here, there's going to be there's going to be liquidity to be swept into. This is our liquidity, and this is our liquidity to be swept into. Okay, if you want to see examples like this, please do follow up. You can leave a comment to let me know if you have understood or not, so I can do more videos like this. Thank you very much.